The latest wave of Iranian counterstrikes has now pushed the entire Middle East into open flames, with missiles and drones hammering energy hubs across the Gulf as Tehran frames this as the opening act of its final reckoning. If the fighting keeps rolling forward without any off-ramp, the Strait of Hormuz could stay blocked long enough to slash 1/5 of the world's daily oil flow, driving prices through the roof, idling European plants, and snapping supply lines that feed factories from Seoul to Shanghai. Beneath the smoke of these strikes sits a much larger contest among powers, where Washington and Jerusalem try to redraw the regional map through targeted blows, while Tehran bets everything on turning local pain into global leverage, a contest that is already rewriting who holds the keys to energy and influence. Hello everyone, welcome back to my channel. Friends, the pictures coming in right now are enough to make anyone pause. Iranian forces have shifted from scattered replies to coordinated volleys aimed straight at the oil and gas terminals that keep the world's energy arteries open. Those sites were never just local assets. They sit at the heart of tanker routes that move millions of barrels every single day. When the first explosions lit up the night sky, shipping trackers showed vessels swinging away from the entrance to the strait almost immediately. Insurers jacked up premiums overnight, and ports in the Gulf began rerouting whatever cargo they could. Tehran made it clear this was no random outburst, but a calculated response meant to raise the cost of continued pressure. Yet the real complication runs deeper than the missiles themselves. The initial U.S.-Israeli moves had aimed for quick disruption of command centers and infrastructure, expecting a fast wind down. Instead, they triggered a sustained Iranian mobilization that pulled in every available short-range system and low-cost drone. Interceptors knocked down many, but enough slipped through to hit storage tanks and loading piers. Gulf governments now face the double bind of condemning the attacks while quietly calculating how long their own export terminals can stay safe if the next barrage widens its reach. At the same time, the tone coming from Washington has grown noticeably more careful. Statements from the administration first claimed major damage to Iranian capabilities, then quickly added that certain follow-on actions went beyond what had been discussed. That careful distancing did not go unnoticed in policy circles, where some read it as an attempt to shield domestic opinion, while others saw genuine unease about bases and personnel caught in the crossfire. The casualty figures remain tightly controlled in public releases, yet the quiet briefings circulating inside defense circles have kept planners awake. What truly sends a chill is how fast the military exchanges spilled over into the economic realm. The strait has always been the narrow throat through which a huge share of global crude passes. Iranian warnings that any vessel ignoring their instructions would face consequences emptied the waterway faster than any formal blockade could. Tankers now idle outside the entrance. Insurance costs have tripled in days, and oil traders watch screens that swing wildly with each new report. European refineries started drawing down strategic stocks while Asian buyers scrambled for alternative cargoes that simply do not exist in the required volumes. Markets reacted the way frightened herds do, rushing toward gold and government bonds while equity indexes shed value in real time. Still, the story does not end with the price charts. Iran's choice of targets reveals a military philosophy refined over years of sanctions and isolation. Rather than chasing symmetric confrontation, they focused on the nodes whose disruption would ripple outward fastest. Those Gulf facilities are not only Iranian revenge points, they are the valves that regulate the flow of wealth for half the planet. Capital S instinct for self-preservation showed itself immediately as trading desks in New York and London adjusted positions before the smoke even cleared. If we step back a little further, the larger pattern comes into view. For decades, the United States and its partners maintained influence over Middle Eastern energy through military presence and alliance networks. Those arrangements now face a test they were never designed to handle. Iranian weapons may lack the latest guidance packages, yet their sheer numbers and low cost have forced high-end defenses into a war of attrition that is difficult to sustain indefinitely. The administration's shift in messaging reflects an awareness that the opponent has more staying power than initial calculations allowed. Meanwhile, another current is forming just below the surface. The Gulf monarchies that once counted on swift outside intervention now find themselves squeezed between two fires. They issue public rebukes of the Iranian barrages while privately exploring fallback export routes and even quiet channels to reduce immediate risks. This quiet hedging is the kind of adjustment that often signals deeper realignments in power relationships. The situation has reached the point where what began as a military exchange is now reshaping the foundations of global finance. The petrodollar system that quietly underpins much of international trade is showing stress fractures precisely because the flow through the strait is no longer guaranteed. European capitals worry about winter heating bills, American voters feel the pinch at the pump, and emerging economies watch their import bills climb. The administration's haste to reframe responsibility underscores the recognition that prolonged chaos could erode support at home. In parallel, Iran's network of partners, though battered, continues to exert pressure through indirect channels in neighboring territories. These secondary fronts keep the main antagonists from concentrating all resources in one place. The result is a diffusion of effort that makes quick resolution harder to achieve. Here is where the dynamic starts to slip out of any single actor's control. Global supply chains were already stretched thin. Layering sudden energy uncertainty on top forces manufacturers everywhere to revisit inventory plans and contingency contracts. Asian assembly lines begin stockpiling what they can. European chemical producers delay shipments, and ordinary households notice the slow creep of higher costs at the checkout. None of this is random. It is the visible expression of structural tensions that had been building for years. Iran's approach to this reckoning is not impulsive rage, but a cold assessment that retreat would be fatal. The leadership understands the stakes and has chosen a path that raises everyone else's costs in hopes of forcing a rethink. The administration's public repositioning is likewise a pragmatic adjustment to realities on the ground rather than a simple political maneuver. When you pull the lens wider still, the episode reads like a textbook illustration of how power shifts in an interconnected age. The same globalization that promised stability has instead amplified the reach of local decisions. Human calculation and miscalculation, the classic drivers of history, are on full display. Once again, the contest for control over energy pricing remains at the core. Whoever can credibly threaten or protect that flow holds a lever that affects economies continents away. By directing strikes at Gulf infrastructure, Iran is attempting to demonstrate that the old monopoly on that lever is broken. The administration's rhetorical adjustments reflect awareness that markets care more about outcomes than explanations. At the same time, a different set of observers is watching with measured detachment. Major energy importers outside the immediate conflict zone are adjusting their own reserves and diversification plans rather than rushing into the fray. That restraint itself becomes a factor that some Western analysts find unsettling, prompting quiet reassessments of alliance durability. The original technical and military competition has now bled into every other domain. Iranian strikes, even when limited in precision, generate enough uncertainty to keep decision makers off balance. Pentagon planners are revisiting deployment assumptions, while the White House searches for an exit that does not look like capitulation. Friends, when you sit with the facts long enough, the whole affair starts to feel like a mirror held up to our era. The very networks meant to bind the world together are now transmitting shocks faster than any single capital can absorb them. Ambition, fear, and the stubborn logic of survival keep colliding in ways that no one fully controls. The chain reaction is already visible in higher freight rates, delayed deliveries, and anxious boardrooms. Oil traders speak of volatility not seen in years, while consumer prices in distant capitals begin their slow upward creep. The administration's urgency to clarify its role comes from a clear understanding that prolonged disruption could reshape political landscapes far from the Gulf. Yet the deeper risk lies ahead. Each successive round of strikes hardens positions on all sides, making compromise more expensive in both blood and treasure. The facilities still burning in the Gulf and the empty shipping lanes outside the strait serve as daily reminders that once the machinery of conflict starts turning, reversing it demands more than words. The machinery of conflict, once set in motion, carries its own momentum, and every new barrage only adds to the weight. What we are witnessing now is not merely retaliation, but a deliberate strategy of asymmetric endurance, one that turns the opponent's technological edge into a liability by forcing it to defend too many points at once. Iranian planners have long studied how smaller forces can bleed larger ones through persistent, low-cost pressure, and the current campaign is the clearest demonstration yet of that lesson applied in real time. Each drone swarm and missile volley is calibrated not for decisive victory, but to keep the pressure constant, ensuring that the cost of staying engaged keeps rising for everyone involved. This approach draws from a deeper military philosophy that values sustainability over spectacle, patience over speed, and the exploitation of geography over brute force. The Gulf's narrow waters and the dense concentration of energy infrastructure become natural force multipliers, turning the entire region into a theater where the defender holds the initiative even while appearing on the back foot. Looking at the broader canvas, this sustained pressure is already forcing a quiet recalibration in how major powers think about energy security. For years, the assumption in Washington was that military superiority could guarantee the free flow of oil through the strait. That assumption is now being tested in ways that expose the limits of conventional deterrence. Alternative routes through pipelines or overland corridors are being dusted off and expanded, yet none can fully replace the volume that moves by sea. The result is a slow but unmistakable shift toward diversified sourcing, with buyers looking farther afield to suppliers who once seemed marginal. This reordering will not happen overnight, but the direction is clear. The old reliance on a single choke point is becoming too expensive to sustain indefinitely. Capital is already voting with its feet, moving into renewable projects and long-term contracts that bypass the Gulf altogether. The market is beginning to price in a future where Middle Eastern oil is no longer the default assumption, but one option among many. This economic rebalancing carries direct implications for the global order that has held since the end of the last century. When energy flows become less predictable, the currencies and alliances built around them start to lose their automatic authority. Countries that once accepted the dollar's primacy because it came bundled with secure supply lines are now quietly exploring other settlement mechanisms. The process is subtle, almost invisible in daily headlines, yet it accumulates like sediment at the bottom of a river, gradually changing the channel. Nations in Asia and Africa that depend on stable imports are accelerating their own energy transition plans, not out of ideology, but out of raw necessity. In this way, a regional conflict is quietly accelerating trends that were already latent in the system, pushing the world toward a more fragmented but also more resilient energy architecture. The same logic applies to the diplomatic calculations now taking place in quiet rooms far from the battlefield. Major players outside the immediate conflict are weighing their interest with the detachment of those who know the fire may spread, but can still choose how close to stand. Beijing, for instance, has maintained a consistent line of strategic patience, increasing its own reserves while encouraging all sides toward escalation through back channels. This is not indifference. It is the calculated posture of a power that understands timing. By refusing to be drawn in prematurely, it preserves leverage for the moment when exhaustion sets in and compromise becomes possible. Moscow, meanwhile, finds itself in a delicate position, balancing its traditional ties with Tehran against the need to keep energy markets from total collapse. The interplay of these interests creates a web of incentives that no single capital can fully control, yet each must navigate carefully. If we draw a brief parallel from history, we see echoes of earlier moments when local energy disputes reshaped global alignments. The 1973 oil embargo, for all its differences in scale and context, similarly demonstrated how control over a vital resource could force distant powers to reconsider their commitments. In both cases, the lesson was the same. When the flow is threatened, the entire architecture of alliances and trade adjusts. Yet, unlike that earlier episode, today's version is unfolding in an era of far greater interdependence, where information travels instantly and markets react in seconds. The speed amplifies the pressure, turning what might once have been a contained crisis into a rolling global adjustment. The difference lies not in the nature of the shock, but in how quickly the system must absorb and adapt to it. This brings us to the human element that underlies every strategic choice. At root, these conflicts are driven by the same impulses that have shaped statecraft for centuries: the fear of decline, the hunger for security, and the stubborn belief that one more push might restore control. Leaders on all sides are caught in the classic trap of escalation, where each step seems rational in the moment, yet collectively leads to outcomes no one truly desires. The administration's shifting rhetoric reflects the internal tension between the need to project strength and the recognition that the ground beneath that strength is shifting. Iranian resolve stems from a conviction that survival demands defiance, even at terrible cost. Both postures are understandable, yet both carry the seeds of prolonged suffering. The tragedy lies in how rarely such realizations arrive before the damage is done. Philosophically, the episode invites reflection on the recurring cycles of power and vulnerability. Empires and great powers have always sought to secure their lifelines through military means, only to discover that those same lifelines can become chains when adversaries learn to tug at them. The pattern repeats across centuries because the fundamental incentives never change. Resources are finite, geography is stubborn, and human ambition is boundless. What changes is the technology and the scale of interconnection. Today, S-drones and instant markets have compressed time and distance, making the old game faster and more unforgiving. In that acceleration lies both danger and possibility, for the same forces that spread disruption can also force innovation and new equilibria. Looking ahead, several pathways are emerging from the current turbulence. One possibility is a negotiated pause once the immediate economic pain becomes too great for any side to ignore. Such a pause would not solve the underlying grievances, but it could create breathing room for diplomacy to regain footing. Another trajectory involves accelerated investment in energy alternatives, hastening the transition away from fossil dependence and thereby reducing the strategic value of the strait over time. A third, more troubling course is continued attrition, where each round of strikes deepens mistrust and locks the region into a low-level but persistent conflict that drains resources without resolution. The actual outcome will depend on the interplay of fatigue, domestic politics, and external mediation, none of which can be predicted with certainty. What can be said with confidence is that the old status quo is already gone. The question is what shape the new arrangement will take. In the meantime, ordinary people far from the Gulf are already feeling the indirect effects. Higher fuel costs ripple through transportation, manufacturing, and daily life, reminding us that no conflict remains truly local in a connected world. Families in Europe face colder homes if winter stockpiles run low. Workers in Asian factories see overtime cut when raw materials become uncertain. Investors everywhere adjust portfolios in anticipation of prolonged volatility. These human costs accumulate quietly, often unnoticed until they surface in monthly bills or empty supermarket shelves. They serve as the most tangible measure of how interconnected fates have become. The deeper lesson here concerns the limits of unilateral control in an age of diffused power. No single actor, however dominant, can dictate terms when the system itself has grown too complex and interdependent. Attempts to enforce outcomes through force alone tend to produce the opposite of what was intended, strengthening the very resolve they sought to break. This is not a new insight, yet it is one that each generation seems destined to rediscover at considerable expense. The current episode is simply the latest chapter in that long chronicle. As the smoke continues to rise over the Gulf, the real contest is shifting from the battlefield to the boardrooms and backrooms where long-term strategies are forged. The side that best understands the new realities of energy, technology, and global opinion will ultimately hold the stronger hand. For now, the immediate focus remains on managing the crisis without letting it spiral further. Yet beneath that urgency runs a quieter recognition that the world is moving toward a different distribution of influence, one in which the old certainties no longer apply. Friends, these developments invite us all to think more carefully about the world we share and the choices that shape it. In the comment section below, I would be genuinely interested to hear your own reflections. How do you see the long-term balance of energy and power evolving from here? Which pathways seem most likely in your view? And what lessons should we draw for the future? Your thoughts help enrich the conversation and sharpen our collective understanding. Thank you for staying with me through this analysis. Until next time, stay observant and take care.